We have HDFC Bank reporting its numbers. The operational details were already out with the deposit growth being quite strong, but now we have the financial data available wherein the profitability has come in at 12,047 crores. The street was working with a number of 12,000 crores. Sequentially speaking, there seems to be a bit of a decline because last quarter the number was 12,259 crores. There's an improvement when it comes to the asset quality as well. The net NPA ratio has come down to 0.27% versus 0.33% last quarter, and the GNPA ratio has come down to 1.12%, and that compares with 1.23% that we had seen in the quarter gone by. Provisioning seems to be steady. The number this time is 2,685 crores, and that compares with 2,806 crores. So sequentially speaking, there is an improvement when it comes to the provisioning as well. Net interest income stands at 3,350 crores. The expectation was 23,500 crores, so a little lower than expectations, but 23,350 crores is still an improvement on a quarter-on-quarter basis to the tune of around, we'll get that number shortly for you as to what the improvement is on a Q-on-Q basis, but last time the number was 22,988 crores when it comes to the net interest income as well. Let's welcome on board Aditya Shah of JFC Investments to talk to us about the earnings. Aditya, hi, thank you so much for making time and speaking with us. Your first take on the numbers. The NII as well as profitability is a smidge below the street estimates, but the asset quality continues to improve.
Definitely, Anisha. A very good set of numbers. There's nothing to complain about as such. The operational details, as you said, were already out in the press release that they had given. Only question was how will the asset quality pan out. The asset quality has panned out pretty steady. There's nothing to complain about there. The slippages number will need to be seen. It could be somewhere around 6,000 to 7,000 crores. But overall, there's no problem as such. Last 2 quarters, agri loans were a bit of a problem. So we need to wait for the management to tell us how the agri loans are really performing. But overall, no problem as such with the results.
But Aditya, given the fact that the numbers are broadly in line with what street was expecting, you aren't expecting a big upgrade or downgrade to the first, cut of numbers that we have for with us, right?
Yes, absolutely. The numbers were pretty expected. But the major driver for the HDFC and HDFC Bank stock continues to be in the near term is the merger update, and we need to wait for the management to update us what is going to happen with the regulatory compliance that they have given to the RBI regarding SRR and CRR. If we hear something from them, then that could materially move the stock. However, all these numbers are broadly in line, and there's nothing to complain about that.
Aditya, what's your sense whether HDFC Bank can continue the kind of performance it did? Because remember, the deposit growth was quite stellar this time around. The pace of advances has been pretty strong as well, of around 15 to 20%. Do you really think this is going to be sustainable for HDFC Bank?
Absolutely. There's no problem as such. In the past, we've seen HDFC Bank grow at 20%. 15 to 20% on the loan growth side of it should not be a problem. We are coming out of a phase where HDFC Bank did not grow its retail book for about 1.5 years, and now they are coming back and growing their retail book properly. So I feel that 15 to 20% growth as the credit cycle continues over the whole of this year will no longer be a problem. But the major differentiating factor of HDFC Bank vis-a-vis the other banks is that the 20% deposit growth, most banks are finding it hard to grow, but HDFC Bank continues to grow very well on the deposit side of it. And as we know, bank balance sheets are absolutely clean. NPAs are no longer a problem. So all in all, no problem as such from the results. Steady as expected from HDFC Bank, and whole of this year should be a steady go for HDFC Bank. Now we wait for the RBI to tell us how will they treat the HDFC and HDFC Bank merger, and will they allow some glide path for the CRR and SLR on HDFC Limited's book.
Let's see what really comes out of that, because of course merger is the key talking point, right? And there were reports as well that after the merged entity, if there's a headroom available, there could be inflows to the tune of $3 billion as far as FII flows is concerned. Let me just add a few more details. We have the net interest margin number that has come into the press release as well, and they are talking about a number of around 4.1% on total assets and 4.3% based on the interest earnings assets. That's the core net interest margin that the company is talking about, or the bank is talking about. The pre-provision operating profit stands at 18,620 crores, and it's grown by around 14.4%. The total credit ratio is at 0.67 and that compares with 0.96% that was reported in the last year of the similar quarter as well. Those are the numbers coming in from HDFC Bank. As usual, no disappointment at all. It's a steady set coming in. There's an improvement when it comes to the asset quality. The profitability number and the NII number is a smidge below what the street was expecting, but not much to complain at all. The NII number stands at 23,351 crores. That compares with our expectation of 23,500 crores. The profitability actually is a bit better, 12,047 crores versus 12,000 crore that we were expecting. The asset quality has improved. Net NPA ratio falls to 0.27% versus 0.33%. GNPA ratio has come down to 1.12% versus 1.23% sequentially. Provisioning continues to be stable, 2,685 crores versus 2,800 crores that they did last quarter. And lastly, the NIMs are around 4.1% of the total assets. So overall, a decent asset and decent number coming in from HDFC Bank.